What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder. And today, my friends, we're going to be talking about not Michael Kors, but Lululemon. But sitting here in the chat, seeing a lot of you guys talking about Kors, so I figured, hey, why don't I go ahead and talk about it? Now, I'm sure most of you guys already signed up for the premium, but, there's people who watch this later, so if you're not already signed up on Zach's Live Trader Premium, shoot me those emails, livetrader@zax.com. Otherwise, you would have missed out on the Michael Kors trade, which looks to be pretty righteous, as we were very bearish on Michael Kors heading into this report, and that paid off fantastically. So that's a very good thing. Build up ZLT big enough so it's just full time. It would be cool if I could turn ZLT into something that Zax would want me to manage with more of my time. Let's put it that way. That's why this thing needs to evolve, because it's in its current state right now. It's just not, I don't know. It's just not feasible, I guess. It's just the structure with the YouTube and everything. It's just not there. All right. So anyway, Michael Kors dumping. Funniest part about this: beat on revs, beat on EPS, and look out below. They're closing 100 to 125 stores. Now, the stores that they're going to close are going to be the fancier, the higher-end stores and such, and which is good, because I think they're finally going to find sort of where their niche is and just settle nicely into it. I kind of went on a rant about them of like, hey, it's Michael Kors. It ain't Gucci, and it ain't Louis Vuitton. So you need to get out of Ball Harbor Mall down here, and then Michael Kors, get out of there. You're just in over your head, buddy. But they really are like the highest end of the low end mall. But I think maybe that's the place where they need to be, and just stop trying to settle in, to the low end of a high end mall. It just doesn't make sense. I think the market's already shown you that no, Kors, we're not expecting that out of you. So I think Michael Kors is going to go kind of, coach. Right? And look how they've rebounded, right? So they've done well, whereas they had quite a bit of struggle because they were in that same sort of space, and then they realized who they were. But anyway, I digress. Getting away from the issue at hand, which is Lululemon, my friends. Now, before we start digging into these technical charts and such and really going through there, let's kick it off, as always, the price, consensus, and EPS surprise chart here on Zax.com. So, as always, the black line corresponds with the right y-axis, which is the price. The little green arrows are earnings beats. Red arrows, a couple of them, earnings misses. Angry earnings miss with the red arrow. And the multicolored lines represent the evolution of our Zax consensus over time. So you can see really choppy history here for Lululemon. I mean, just some really choppy stuff. And that's why you have a really choppy stock chart. And it's all over the place, and there's a ton of volatility in this name. So trying to make sense of this is a tough one. And I think you could see sort of two clear kind of behaviors here in the pricing consensus. The first of which is this, just overpromise, underdeliver, and that's happened pretty much throughout so far, right? At least the last several years. Overpromise, underdeliver. So that's definitely a negative. But I have seen sort of a little bit of a shift here where at least there's hope, right? There's this hope of growth over here, more hope of growth over here. So it's there. It does, in fact, exist. So that's good. But if you're looking at where this EPS is now, this is sort of the same promise in 2017 that they had to begin 2016, right? And that was even sort of middle of the road in 2013 where they were looking. This is late 2012, early 2013. But at the time, the stock was a lot higher. You had stock in the 70s. Now we're a fraction of that, but we could name several reasons why this is the case, right? What are some of the reasons why here? Beep, 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 boom. Now you got this ugly black eye, and you got a black eye here too of a couple of misses that have all of a sudden showed up. You've got the overall sort of downward death spiral of retail. But Lulu is a little bit different. So there's a few retailers out there that have really been making strides in terms of making their location much more than just a shopping area, right? They add a superior customer experience. One of the things that Lulu does, they have like these yoga clubs and all this sorts of stuff and running clubs and try to get people to meet there and make it more of a thing. Now, I don't know how far that's going to go in the long run, but at least there's some effort. And then the other thing was they put a lot of effort behind their e-commerce. But the head honcho that was running that place got fired in early May. So it was kind of like, thanks for trying, buddy. Failure. So he got canned. So I expect them to speak to that during this earnings report. Zach's ranked number 3 hold right now. Value style score is C. Growth of A. Momentum of C. They're going to report after the bell mañana, so you got the rest of the trading day today and tomorrow to figure out what you want to do, which is perfect because Friday morning we're going to do the morning after. Don't want to miss that one. That's going to be a ton of fun, I believe. They are in the top 32% of our Zach's industry rank right now, and we'll show you the rest of that sort of textile industry. Looking here on the revenue numbers, not really blowing you away, especially in the current quarter. So current quarter looks like 3.4, next quarter 9.49, current year 9.5, next year 10.29. So still solid revenue numbers, but it's a little upsetting that they're saying, oh, this quarter is gonna miss here. In terms of EPS, you can see here negative 8% growth, so a contraction in EPS for this quarter. Next quarter 7.89%. Current year numbers are kind of screwy. I don't know why. And then next year, 11.99. And if you look at the overall kind of feeling among analysts, I pay attention to this a little bit, is that just over the course of the last week, so a week before earnings, you got analysts coming in and dropping their EPS estimate for the current quarter and next quarter. But the overall effect to the Zach's consensus estimate, aside from this big dip you had 90 days ago, it's actually ticked up a little bit, ticked down a little bit for the current quarter, sideways, for the most part sideways. So really the big reset in the expectations came following that report last quarter. Okay. And you can see here surprise history, kind of a little bit of disappointment there, but we'll see these numbers in a little bit more detail here as we look at Lulu. But something I wanted to point out, pretty interesting here, is that over the course of the last 5 years, Lulu is actually down 33%, while the overall industry is down about 3.3%. And if you go year to date on this, you can see the disappointment. And of course, all of this pretty much stemming from last quarter's report, because he had relative outperformance. And then watch that last step. It's a Lulu. And these guys totally took a tumble and have yet to recover, really. So underperforming and underperforming industry. Not what you want to see from a technical perspective or anything like that, right? So now let's look at, actually first, before I get into this sort of consolidated surprise chart where we can go ahead and take a look and see what has happened over the last several earnings reports, let's look at revenues here for the last few years. And, 16, 13, 14, 13% revenue growth. Decent revenue growth here. Some of this obviously fueled by increasing their footprint, the amount of stores that they have out there. And I saw that same store sales, like the comp numbers, are not supposed to be so good this quarter. Some people are looking for a 1% contraction, actually. But I think they had 8% contraction or something last quarter, or it was 8. There was an 8% in there somewhere. Don't quote me on the exact number if it was an 8% contraction or if it was at 8% the previous year. I forgot. Sorry. Lots of numbers going around, guys. Sometimes I don't have them all my ducks in a row. Okay, so let's go ahead and look at the technicals here really quick. So unfortunately, they were throwing a little wrench in my thing because part of my analysis recently has been using the money flows, and money flows hate the gaps. And when you see the gap, it kind of throws off the money flow because that's kind of how the calculation is, which is okay. You know, I don't base everything on that, but just look at the herky-jerky nature just kind of across the board. Even looking at the commodity channel index, you get these just wild gyrations all over the place. And that's pretty much just a result of the volatility, the inherent volatility that you see in the stock. Now, its reactions to earnings, drop and go, a spike, and it still let go, drop down, and then now it's come down to new lows. So I think overall there's a sort of a bearish sentiment here with Lululemon. If you look at some key levels, you can see this huge spike near sort of 50s, 52s, right? There's a lot of volume that went out at 52s. You obviously have the floor, which became the ceiling here, right around the same area, trading under the 50-day moving average. So from a technical perspective, it's weak and could be getting even weaker. This should be, I mean, this is the most troubling part right here, is it getting into the gap barely, stalling out, just running out of gas, giving up, and then coming back down, right? So a little bit of a stop grabber perhaps, coming up and getting those, and then I guess several sort of just retail reports overall coming out not being so great definitely put pressure on Lulu stock here in the short run. So that's definitely some negativity over there on the Lulus. And, you know, last time it got up to the 50-day moving average was the day before earnings, and it just let loose. So lots of pressure here. And one of the things I was talking about with Michael Kors was it looked like institutional selling. And that pattern looks a little similar here also. So what I mean by this is it's like the retail guys jack it down, and when it finds a bid following like a terrible earnings report, you kind of got to wonder why. And then if you added good old regular volume to this, which I can do here, the shaken money flow is supposed to be a graphical representation of this. But like I said, the gaps will throw it off a little bit. But you can see relative to other parts, other months, right? See this relatively low volume. And now you got the relatively high volume that's taking place. So there's been a volume increase while they've kind of, you know, let this guy stick in here for the most part. I think that is institutional selling right there. And could be a negative here on the stock. So when you see the increased volumes and it's just kind of going sideways here after a big gap down in a not so good earnings report, I think perhaps that's the institutions getting out of the way of this one. Okay. Now to the bar chart, and we're going to get back to this, obviously, this chart later, because we're going to need to find, well, let's look at some levels. 43. Okay, so 43 is I don't know if those are all-time lows, but multi-year lows that you have to consider. And then 52 to the upside. So without even looking, if bar chart is pricing, if the options chain is pricing in $5, I'm going to start laughing. Okay, so you guys know the drill. Front weak option, put up the side-by-side view. We're going to do 48, seeing as the stock is trading just a shade under 48. Oh my goodness. It's like I had a crystal ball and knew exactly what they were going to price in on earnings. $48 call, 264 by 272. Call that 268. At the money put, 232 by 240. We'll call that 236. 504. Divide that by the strike price of $48. They're looking for a 10.5% move. So this is exactly what they're pricing in, what we saw in the charts. That's a good thing, guys. When we see it from a technical perspective and go, well, yeah, 40, it's probably around there, and it's probably around there. When the options market is confirming what the technicals are saying, that's a good thing, okay? That is a good thing for us. Because now you've got sort of two levels of strength on this. So this is good. I would actually say that this is going to end up lending itself to selling premium here, because we have that sort of double confirmation of the technical levels plus what the options market is pricing in right now, okay? And coming off a not so good report last time. So let's see. Let's take a look at this. Let's just go out. Allow this bar chart to load. Let's just go out to the front month. So the June 16th expiration, because here you're going to see a bit more liquidity rather than the side-by-side view. Let's get it all stacked. And look at what they're going to make us do. Oh, wait, do I have to? 43s? Let's just do show all. This should go a little quicker than some of the other options chains because it's Lulu, and of course it does. Okay, so first, let's look at 52s. And see where some of these open, where the big open interest is. 52.50 has a nice little chunk of open interest at it. And then, of course, it keeps on going. Look at that, 7,000 contracts all the way up to 55. So let's just look at 52.50. First, we're going to look at a credit spread. And really, I guess we don't even have to. See, coming out here, you guys know I kind of eyeball. I say, okay, 17 cents between here and here. And that's a lot tighter there, right? It's only 9 cents there. I like the 17 over the 9. Interesting to see that, though. Let's take a look at this. So one idea for a credit spread. So in this case, this would be a bear credit. So going short the 52.50, you're going to get 124. Simultaneously going long the 53 is going to cost you 107. So you get a 17-cent net credit here, which isn't as terrible as you guys are going to think, because remember, the difference in the strike prices here is only 50 cents. So that means you're going to have 33 cents at risk. So you can make 50% on this bad boy. And all you need is shares of Lululemon to close at or below 52.50 at expiration. Doesn't sound like a terrible idea now, does it? Now, granted, it's not quite. So the market's pricing in just a little over $5, and the thing's at 47.86, right? So 47.86 plus, what was it? I think it was 504 to be exact, something like that. So this puts it closer to 53. However, I think I'm kind of comfortable with that, just given. I don't know why, but I always find comfort in, the where the 5,000 contracts are, right? That being said, you go, well, Dave, why not 55? Well, sure, go ahead. If you can price something out a little nicer, then go ahead. So let me just circle this again and make it sort of official here in the chat to remind myself. So I'm going to say that the bear credit is short the June 16th, 52.50, 53 call spread for a 17-cent net credit. Okay? Did I do that right? 17. Boom. Wonderful. So there's that. I'm going to go out on a limb and say that a lot of this action, 57.50s, 55s, right, happened a while ago, right? So Lulu's just recently really come under pressure and dipped under 48. For most of the quarter, it was in the mid 50s. So if you're selling against holdings that you have, selling those probably wouldn't have been a terrible idea. Selling those all open, right? So that's probably got some to do with it. It could also be, remember, we were talking about institutions possibly shedding some weight here. That could be indicative of that as well. So I think that's why. Okay. Now let's go on the flip side. What if we're bullish, looking for a bull credit? So we were saying basically 43s, right? Somewhere around there, 43, 42. This is pretty interesting too. Let me make sure that this didn't. You guys know that sometimes bar chart likes to put on that good old refresh on me when I'm not looking. No, it didn't. Look at the relative price of some of these, kind of compared to where the other ones were, right? So here it is, $3 out at 45, and that's 130. Okay, where $3 out here is 160, 150. We don't get to 130 till you're $4 out. Just something that I see every once in a while, and you just go, oh, okay. Anyway, where's the open interest on the put side? 45, certainly. That's where it is. But we want to go a little further out than that. And we can. 44s, 43.50s. Just like an 11 here, 12 here, 11s, 12s. That's not bad. Look at this. Now, I know some of you are going to see, well, why not get on the other side of that? We totally could. I'm sure we could. But remember, this is a bullish credit spread, so you're actually hoping the thing goes up or goes sideways. It just doesn't go down $5, right? So you have a little bit of comfort in that, I think. So what does this look like? This is a bullish credit spread. So we would go ahead and sell the 43 put, 78 cents. Simultaneously buy the 42.50 put for 66 cents. So 12 cents is going to come in your pocket. Now again, the good news here, the difference in the strike prices is only 50 cents. So minus the 12, you're talking 38 cents. So you can make 32% almost on this. So I'm going to say the bull credit is short the June 16th, 43, 42.50 put spread for a 12-cent net credit. All right, but what if we want to be more aggressive? So let's stay here and put our Bears hats on and say you go long the 48 put. We said the market kind of pricing in 43 as the floor. The options market putting a whole lot of importance on the 45. Why don't we go ahead and sell into that? And do the math, see what this gives us. So going long the 48 put, 258, simultaneously shorting the 45 gets us back 133. So you're talking about $1.25. Now the difference in the strike prices here is $3 minus that $1.25. That means you can make $1.75 on 125 or 140% on this one. So I'm going to say the bear debit is long June 16th, 48, 45 put spread for 125 net debit. What about the bulls? Where are the bulls out here? So it's basically 48. We'll use 48. And again, you notice a sort of tilt towards the call options on this. 52s, 52.50 is what we used before. And we can just come down to 50s. Again, I like to kind of do the halvesy just to do the math and see if it works. And it does. It oftentimes you get the more than double. So in this case, if you go long the 48, that's $293 it's going to cost you. Simultaneously shorting the $50 call, you're going to get back $202. So your net outlay in this case is going to be $91. So you can make $109. Difference in strike price is $2 minus the 91. So you can make 120% on this one. So I'm going to say bull debit is long June 16th, 48.50 call spread for, what did I say, 91 cent net debit, okay? Now, just for giggles, I just want to look at this front week, which is like the 1 day, right? Just to look out at this, you know, the call spread that we put on there. So in this case, it's 11 cents on the 52.50, 53 versus 17 cents that we had in the front week, or in the front month rather. And then on the put side, we were 43, 42.50. Here's only 8 cents, where we got 12 on the other one. Okay. So a few different ways to play this thing. Now, what do I think is going to make the most sense here? In this case, I honestly believe that we could peg this thing in between 43 and 52.50. That's a pretty big range. It's already dumped some. So I think an iron condor might be in order here. Now look at what the iron condor gets you. You just go out to June. You're going to get 12 cents on the bull credit short. You're going to get 17 cents on the bear credit short. So that's 29 cents. But the amount of money we're going to have at risk, right? The most amount that we could lose is just the 50 cents. So 50 minus the 29 means we can lose 21 cents. So the most we can make is 29, right? But amount of money at risk we have is only 21, right? Actually, so this is the way to look at it. So only 21 cents at risk. This means you'll actually more than double up in most of your options accounts if the Condor holds both ends. So as long as Lulu stays between 42.50, or I'm sorry, 43 and 52.50, that one makes a ton of money. So that's what I think is where to go. Okay? That's where I think. So I'm going to say my preferred is the Iron Condor. Iron Condor, I guess, how do I do this? 52, 50, 53, 43, 42, 50 for 29 cents. Net credit. That's what I think you got to do. Okay? I just think it's overpricing it a little bit. And did I show you guys this part? I put the cart before the horse here, guys, and I'm sorry I forgot to show you the consolidated surprise chart where you can see what's happened recently. Big moves recently. And I just don't think big moves last forever. I just don't. I just think that maybe, you know, we can take a little breather here and it's not going to be a huge move. It has moved a lot. Like a lot. Last time it was under 10%, April 2015. We do have a January 2015 quarter where only moved 5%. So here's just a little one here. So it's been a while since there was sort of a muted reaction to Lululemon earnings. I think it happens this time. I think we get a little bit of a muted reaction here. Okay? But overall, if I had to pick a stance, I think I'd be a little bit bearish on Lulu right here. just because of this trend sort of from a technical perspective. But I don't think it's going to be bad enough where it breaks the lows and makes all new lows. No, I don't think that's the case. I think those two technical levels are going to stand in here a little bit, and it should be okay. All right, so there's that. Yeah, and that's all June. Yes, June 16th. Okay. So, you guys want some lottos though, right? Of course. Did somebody do a lotto on Coors? Please tell me somebody did a lotto on Coors and made some money. That would be cool. Okay, so I guess your lotto play, pick a side. Above through the 52, getting into the gap, the 53s on the call side, or past the, under 43 on the put side. So let's go to the put side. I think this is where it is. These 43s for 60 cents. Somewhere down there. Okay? So there we go. I'm going to say lotto 43 put for 63 cents. All right. So I do have an overall sort of bearish tilt, I guess, to Lulu. I don't know if you guys can tell, but I'm a little lukewarm about how much I think they're going to move. That's why I think the trade that pays is going with the good old Iron Condor on Lululemon. All right, guys. So thank you so much for hanging out with me here today on Zach's Live Trader. And again, if you guys aren't already signed up, but you guys all are, but whoever's watching this video later may not be, livetrader@zax.com. Shoot me the emails and give you all the details. And mañana, we've got a, what are we doing tomorrow? I forgot what we're doing tomorrow. We've got another report tomorrow due out. What are we doing? Why am I got a brain fart? Oh, Broadcom, right? We're doing Broadcom tomorrow. Gonna do Broadcom. And what else? Broadcom and Friday. Oh, tomorrow is the Good, the Bad, and the Ugly review. And then Friday, we've got the morning after session, which is fantastic. I don't know about you guys, but there's been a few trades we found in the morning after session that just fantastic. Fading some of these crazy moves. And we're going to have the Lulu report be able to react to that, and the Broadcom report also, which is why we're going to do Broadcom a little bit earlier on Thursday. Okay, guys? So, again, thank you so much for hanging out with me here at Zach's Live Trader. And I will see you all mañana for Broadcom. Have a good one.